Bill and Joe, this is going to be an exciting panel. I've been looking forward to this panel with Bill and Joe. We're going to talk about strategies and how we identify unique pre-IPO companies that all of us can get involved in. Bill, your show. Thank you.
Thanks, Grim. Joe, do we have Joe here? Come on in. Come on now. So we were asked to talk today a little bit about pre-IPO strategy. Obviously, you all know the business that Linqto is in. And so we're on two sides of the IPO kind of calendar and what works. We're out there scouting all the time to buy, source, get onto our platform, pre-IPO product. And as you all know, if you've been involved in that race, it's a tough race, and it's usually only large qualified institutional buyers that play in that space in the secondary market for the last few years, and Linqto has kind of democratized that and opened it up. So we have to have a strategy ourselves on the buy side as well as the sell side. Joe takes care of the sell side, does a great job. He's not only our intelligence in this company, he's also our mouthpiece. So he's the one who's in direct contact. Probably most of you know him better than you know me. It's a pleasure to be working with somebody like Joe. It's been great. Thanks, Joe. So in terms of a pre-IPO strategy, kind of where we're going with Linqto things, let's walk through just a few pieces. We've got some slides we can share with people. And then also maybe we'll do a quick little demo so people can understand what's involved. But Linqto is private investing made simple, and that's been our tagline since we launched in early spring. And that's what we do every day, is we try to make this easier for our customers by removing the friction in the center. So first question, Joe, I'll put back to you. Linqto is very heavy, obviously, in tech stocks. And that's certainly the largest sector. Can you tell us a little bit about what's going on in the tech stock market?
Well, yeah, I mean, I think, Bill, as you recall when we were in the early days of forming strategy, right, for Linqto, we made a very definite decision that we wanted to focus the product offering on tech companies. And the reason for that is simple, right? Because we believe that these companies represent sort of the fundamental wave of innovation that's driving what we're all living through right now, the third industrial revolution, which is the digitization, basically, of economies and social relations even. So those tech stocks today represent, 23% of the S&P 500, 13 trillion in value today, and that's the single biggest chunk of the equities market. They also
how about performance, Joe?
Well, yeah, I was about to say they also happen to be the best performing. So not just the largest sector, but also the best performing. If you look in the last year, they've performed well above the general market index, right? 47% versus 20% for the S&P 500. And their trailing 12-month earnings growth has been 54%. And for the broad market, it's actually been negative for the last year. For obvious reasons, right? Because of the pandemic, tech, hasn't been hurt all that much by the pandemic because the business is, online, as we ourselves have experienced at Linqto, Bill.
So, Joe, I mean, this has been a fantastic year for IPOs. It's amazing, given the state of the pandemic, that so much business that Wall Street is doing so well, especially in the IPO sector. Give us a little background on what's going on in the IPO market.
Yeah, I mean, the IPO market this year came off the blocks really slow at the beginning of the year, and then it ultimately just closed pretty much, in the early months of the pandemic. But starting June of this year, the IPO window reopened. And since then, that market has been on a tear. So actually, we're going to close the year with a record number of IPOs compared to last year. It'll exceed last year's by a very, very significant amount, as you can see from this chart here. the tech unicorns today have benefited from a very long streak of funding, right? From in the last 10 years, there's been $3 trillion of venture capital that's been funding these companies. And that's a level of funding that we've never seen in any other period of time, a similar period of time in the past. And so as a result, what's happened is now we have this huge number of companies that have been funded over a long stretch of period, over this long period of time. They've accumulated significant and created significant value. There's about 504 unicorns today. They're valued at 1.6 trillion. That value buildup has somehow got to be liquefied, right? Because the investors, the VCs and the PEs need to realize at a certain point returns on that investment. So that bodes well for a large and quality supply of tech companies into this IPO market. And that's why you're seeing this rush to go public.
Excellent. So thanks, Joe. Let's go through just a little bit about what we're doing here at Linqto and how it fits into this whole pattern, this whole market. Linqto works with accredited investors. We invest in private companies. They're the same regulatory pieces for Ripple or for Airbnb or for any private companies that are worth multi-billions of dollars, are the same regulations that apply to the small startups that we have dealt with in the aggressive form stage. So we pretty much opened a market now from seed all the way to just pre-IPO by democratizing the space and allowing it to be invested in by our clientele. But you do have to be an accredited investor to be involved. And we've created a new investor status application verification system on the website. So if you're not sure if you're an accredited investor or you need to get the paperwork done to prove it and the certificate, you can come to our site, and for free you can get an accredited investor verification status form. I encourage you all now, while we're talking about this, to just either go to the App Store or the Play Store or look up Linqto, download the app, or go to our website and take a walk through the website. It's very easy to work by the application process. Sign up is free, registration is free. So even if you're not sure that you want to buy something, go and register and take a look around. One of the major differences, I think, between how Linqto operates, we talked about this a bit, with the process Linqto's been involved in to make private investing simple is removing the friction that's involved in the traditional secondary market price. You may be surprised to hear this, but of the billions of dollars that were spent last year in the secondary market buying shares, there were maybe only hundreds of buyers who were buying all that. It's large. This has always been the domain of large qualified institutional buyers. Sometimes minimums are $1 million, 5 million. You can probably find a few pieces as low as 250,000, but Linqto's democratized the space by removing the friction and also pre-purchasing. So we do something a little bit different. We're not a broker. We don't operate on a brokerage basis. We do have a broker dealer supervisory company that monitors everything that we do, but we're not charging commissions and we don't work on a brokerage basis. We go out and pre-purchase the shares and go through that ROFR process and go through the 30, 60 days to accumulate and buy it. We then own it and we allow investors to come in on our platform with the products that we own. Joe, can you explain a little bit about the special purpose vehicles and how they work?
Yeah, the SPVs are basically a really efficient way by which we're able to aggregate small accredited investor tickets and lump them together so that they are a sizable quantity and then able to be represented by Linqto on the cap table of these issuing companies. What you talked about, Bill, has the advantage to our end customer, has a couple of advantages to them. One is the fact that you can make your investment without contingency. So in the institutional world, when you make these investments, you're actually just pledging capital, many times you've got to actually put the cash into escrow. And then your ability to close on that investment in any one of these unicorn companies is contingent. It's contingent on a couple of things. One is that the issuer, actually consents to the sale, because that's required in the case of all restricted stock. And the second is that the issuer and other large shareholders of the issuer don't exercise certain rights of first refusal that they typically have, right? Which is basically means that they have the right to buy those shares from the seller at the same price that you've offered. So if that ROFR, that right of first refusal, gets exercised, you end up with a busted deal, right? And if consent isn't gotten, you end up with a busted deal. And sometimes if you're participating in some of the SPVs that are put together, the contingency also, involves the SPV being able to bring in a whole bunch of other investors to get up to a certain large number before the deal can be transacted. You have none of those contingencies at Linqto. You can simply click and, if you want, buy $10,000 worth or increments of that amount in any one of these offerings.
Thank you, Joe. And you see some of the offerings that we have up today on the platform. They may have not been there yesterday. They may not be there tomorrow. We're constantly sourcing. We buy blocks, and then you have the opportunity to invest in them, but they don't necessarily last very long on the platform. It depends on the popularity of the product. But Joe, if you could talk about the kind of the three circles here and how the product that we have fits into the juncture and the intersection of these pieces.
So we talk at the very beginning about sort of the foundational investment thesis here at Linqto, right? Which is that we want to be able to offer our customers the ability to invest relatively early in the companies that are part of this digital revolution. That has certain key aspects to it. One is the use of that technology to disrupt legacy industries. One is the use of that technology to actually digitize business processes. And many times that actually involves also the creation of a native digital asset to further that digitization and the business model that grows out of it. So our offerings fall in this Venn diagram. You can see in one or more of those sectors, if you will, of activity. But at the end of the day, they're all part of that investment thesis.
So, some of the major things that we look at in terms of buying pre-IPO shares, one of the biggest pieces is when to buy. So if you saw the good year with Russell Crowe, Albert Finney is asking young Max, what do comedy and making a fine wine have in common? Timing is everything. It's the same thing in this pre-IPO market. Just as an example, we were offering Marqeta on the platform last week at $14.75, and on November 25th, they announced they were going to IPO, and by the next day, you couldn't find it out in the market for less than 20. But we had purchased it before, so you can still go in today. I think there's a little bit left and buy it at $14.75 because we're trying to do the timing where we understand which companies are going to be announcing going to IPO and get in before they make that announcement. Once the announcement is made, the stock is likely to double in its secondary market value. So in terms of pre-IPO strategy, the importance of being early on is kind of a key factor, but there's a catch-20 here too. There's a dichotomy. You can get involved in a company at a very early stage and wait for 10 years to get a return out of it. So when are they going to go to IPO? What we're leveraging are those companies that within the next year or so may be going to IPO. So you need to get into them before they announce. And then hopefully they get to an IPO very quickly because that's where we make the big spike in what we're doing. How we look at it from an IPO strategy in terms of what to buy, I think the first thing that I'm a mathematician, unlike Joe, who's an investment banker. I come from a math background, so I look at everything with metrics. It's kind of a horse race, handicapping it. So we take a look at both speed and length. For speed, we use a value curve algorithm. For length, we use the current capitalization. And then we're always looking at the discount or premium to the last valuation. We'd like to get in below the last valuation price when possible. Sometimes that's not possible if the company's already announced their IPO, because that can substantially increase the valuation. The other thing we look at is what's the buzz? The IPO discussion by the companies. Have they selected an investment bank? Are they selecting exchanges? Once they get to registration and filing, we're pretty much shut out of this market. So let's take a look at a couple of these. How do we look at speed? So speed is determined by value increase over time, what we as investors often refer to as the hockey stick effect. If you look at Marqeta, they're right now exhibiting pretty great speed, because if you look at where they were in their valuation curve and then look at the two big bumps that they've had just in the last couple of years, that creates a hockey stick. And those tend to be the ones that are most popular in the marketplace. People love the stories about something really growing very fast. We also take a look at length. I'm reminded of Secretariat coming into the Belmont when Secretariat blown away the other horses in the Preakness and the Derby, and everybody's saying, but what about length? And then Secretariat took it with 31.5 lengths. So you want a horse that's got length as well. And for this, we're heavily invested in Ripple. Here you can see the difference in the curve here, what we consider to be length. The difference in time, the 3 years between their Series B and their Series C, means that they were making money, they were doing well, they were building a business. And so you also want to get involved with a company that's building a good business. And Joe, why don't you tell us a little bit about Ripple and our strategy for buying Ripple, because we've been pretty long in Ripple this year. And while you do that, I'm going to stop this share and actually bring up the app so I can flow through it with you.
Right. So, with Ripple, as many of our customers know who have invested quite, I think, continually in Ripple, we benefited from being able to lock up certain sellers on a forward basis, meaning they committed to sell us shares at a certain price over a certain period of time. And we were fortunate to have been able to do that before this current rally, right? It's basically caused XRP price to increase by over 150%. Obviously, because of the fact that there's a fair amount of economic value outside of the core enterprise value of Ripple that's tied to their ownership, if you will, of a significant stock of XRP, 50 to 60% of the issuable coin. That price increase has, in the minds of many market participants, increased the intrinsic value also of Ripple. And so in the course of the last 45 days particularly, we've seen the offering prices for Ripple increase very significantly and move from anywhere from the $28 to $31 in the secondary to as high as $61. Right. So, but because of the fact that we've been able to secure those shares at significantly less than that number, as Bill said, we were able to secure them at a discount to the last round valuation. We're continuing to offer that investment at prices that approximate that purchase cost rather than the elevated $61 price that now we're seeing being offered in the secondary market.
So, Joe, thanks for all your time this morning as well. I want to get moving on because I'm very anxious to see my good friend Alexandra come in here and get on to the next session, which we'll be doing right away. But thanks for your time this morning, Joe. And for the rest of you, if anybody has any more questions, you can put them into the chat and we'll be glad to answer them. Joe and I are also available anytime for your questions. Download the app. Play with it. You have a chance today to buy some SoFi, Kraken. You can only buy Ripple. This is one thing I should mention about what Joe was talking about. We also have a limitation on the number of investors per investment that's based on IRS regulation. So the only people right now that are going to see Ripple on their phone are people who've already purchased Ripple. because you can buy as much more as you want. We have plenty of Ripple, but new users would not see that on the phone. So I'll mention that, and then I'm going to stop sharing here, and also would like to bring Karim back in. I see Alexandra is here. Howdy, Speta.
Hi, Bill.
How are you? It's nice to see you back again. Karim, I'll hand it over to you for the next session. Thanks for the time, everyone, this morning.